Top stocks Warren Buffett could buy in 2026, hidden gems revealed. Warren Buffett is more than an investor. He's a guide for understanding where opportunity meets value. As we approach 2026, his moves are closely watched not because he chases the latest trends, but because he identifies hidden gems, companies with strong fundamentals, durability, and long-term growth potential. Buffett's strategy is timeless. He invests in businesses that are essential, profitable, and resilient, rather than trendy or hyped. Each stock he buys sends a signal to the market, an indication of where the smart money might flow next. For investors, understanding Buffett's potential 2026 picks can provide a blueprint for building wealth while avoiding unnecessary risk. In this video, we'll reveal stocks that Buffett could target in 2026, drawing from his investment philosophy, past patterns, and emerging market trends. By the end, you'll understand why these companies may be overlooked gems, how to analyze them, and how to position your portfolio with a long-term Buffett-style mindset. The Buffett investment philosophy, picking hidden gems. Before diving into specific stocks, it's crucial to understand how Buffett identifies hidden gems. His strategy is built on 3 pillars. 1. Durability. Buffett invests in businesses that can thrive for decades, even through economic cycles. He looks for companies with strong competitive moats, such as brand loyalty, proprietary technology, or regulatory advantages. 2. Value at the right price. A stock may be promising, but Buffett only invests when it's reasonably priced relative to its intrinsic value. Overpaying for hype can destroy returns. Smart money waits for opportunities. 3. Exceptional management. Leadership is a cornerstone of Buffett's philosophy. He invests in ethical, capable, and disciplined leaders who can navigate challenges and grow the company sustainably. Buffett often avoids companies that are difficult to understand or have unpredictable cash flows. In 2026, hidden gems aren't necessarily flashy or popular. They are fundamentally sound businesses that offer consistent growth, recurring revenue, and long-term resilience. Sector insights, where Buffett's hidden gems may lie. Based on historical investments and emerging trends, several sectors are prime candidates for Buffett's 2026 hidden gems strategy. 1. Financial services. Buffett has a long history with banks, insurance, and payment processors. In 2026, fintech innovations like digital banking, payment infrastructure, and blockchain-backed financial services may attract attention. The key is real revenue streams and ethical management. 2. Consumer staples. Companies producing everyday essentials remain resilient during downturns. Food, beverages, hygiene, and household products offer predictable cash flow. Hidden gems here are businesses with strong brand recognition and pricing power. 3. Healthcare and biotech. Rising global populations, longer life expectancy, and medical innovation drive demand. Buffett may consider companies providing essential services, medications, or medical devices, especially those with defensible patents or recurring revenue streams. 4. Energy and infrastructure. Buffett's energy bets often include utilities and renewables. Hidden gems in 2026 may lie in clean energy solutions, infrastructure upgrades, and emerging energy technologies. Stability, cash flow, and long-term relevance are key. 5. Technology with predictable revenue. While Buffett avoids hype-driven tech, he invests in companies with recurring revenue and essential services. In 2026, this could include AI infrastructure, cloud computing, cybersecurity, and payment systems, tech companies whose products are mission-critical rather than speculative. Across these sectors, the pattern is consistent: resilient, essential, and profitable businesses with long-term potential. These are the kinds of stocks Buffett would likely consider as hidden gems in 2026. Buffett's screening criteria: how to spot hidden gems. Investors seeking to align with Buffett in 2026 should adopt his screening framework for hidden gems. Revenue predictability. Companies that generate consistent earnings year after year are more attractive than volatile startups. Competitive moat. Look for businesses with barriers to entry, strong brands, patents, economies of scale, or regulatory advantages. Cash flow strength. Positive cash flow ensures companies can invest in growth, pay dividends, and weather downturns. Undervalued relative to intrinsic value. Even great companies can be poor investments if purchased at excessive prices. Buffett looks for a margin of safety. Alignment of management and shareholders. Ethical, competent leaders who prioritize long-term growth over short-term gains are essential. These criteria help identify companies that are currently overlooked or undervalued, which is exactly what Buffett seeks in a hidden gem. Financial services, hidden gems in banking and fintech. Financial services have long been a core focus of Buffett's portfolio. In 2026, hidden gems in this sector are likely to be companies that combine stability, predictable revenue, and innovation. Traditional banks, for instance, provide steady earnings and benefit from rising interest rates. Yet the real opportunity may lie in fintech startups and payment processors that have established consistent revenue streams. Companies that facilitate digital payments, streamline transactions, or provide critical infrastructure to banks may be overlooked by mainstream investors, making them ideal hidden gems. Insurance is another Buffett favorite. Beyond just underwriting policies, successful insurance companies generate a float, capital held temporarily that can be invested for growth. In 2026, hidden gems in insurance may include firms that leverage technology to reduce risk and improve efficiency, providing a modern twist on Buffett's traditional playbook. Investors looking to align with Buffett should seek financial companies with durable competitive advantages, ethical management, and the ability to generate consistent profits, even during economic cycles. These are the types of businesses Buffett often identifies before the crowd. Consumer staples, everyday necessities with strong moats. Buffett has long valued companies that produce essential goods because demand for these products is largely insensitive to economic cycles. Hidden gems in consumer staples for 2026 may include smaller or mid-cap firms with strong brands, loyal customers, and pricing power. Think beyond household names. Some companies are quietly dominating niche markets, organic foods, premium beverages, or specialized household products, with predictable revenue streams and loyal customer bases. These businesses are less glamorous than tech or biotech, but they are recession-resistant, cash-generating, and often undervalued. Buffett's philosophy emphasizes understanding the business you invest in. Even within consumer staples, he looks for clarity of products, consistency of earnings, and strong leadership. Investors applying this lens in 2026 can uncover hidden gems overlooked by short-term focused markets. Healthcare and biotech, investing in human necessities. Healthcare and biotech offer another promising pool of hidden gems for Buffett in 2026. Global populations are aging, chronic diseases are on the rise, and medical innovation continues to accelerate. These dynamics create long-term growth potential for companies providing essential healthcare products and services. Buffett tends to focus on businesses with predictable revenue, durable demand, and defensible market positions. This might include mid-cap pharmaceutical firms with a few key patented drugs, medical device manufacturers with proprietary technology, or healthcare service companies that serve aging populations. Unlike speculative biotech startups that depend on one successful trial, Buffett looks for businesses with consistent earnings, strong balance sheets, and ethical leadership. Hidden gems in this sector may be well-managed companies that the market undervalues, providing both growth potential and resilience against market volatility. Energy and infrastructure. Stability meets opportunity. Energy and infrastructure are classic Buffett plays, combining steady cash flow with long-term relevance. Utilities, renewable energy firms, and infrastructure companies are critical to society and often generate predictable, durable returns. In 2026, hidden gems may include renewable energy startups with established operations, smaller utility companies poised for growth, or infrastructure firms modernizing essential networks. The key is durability. These companies serve fundamental human needs, making them resilient during market swings. Buffett's approach in this sector emphasizes long-term thinking, valuation discipline, and operational reliability. Hidden gems are often overlooked because they lack the hype of tech stocks or trendy sectors. Yet these companies can provide both steady dividends and long-term capital appreciation, making them ideal for a Buffett-inspired portfolio. Technology with tangible value. Buffett's evolving approach. Warren Buffett was once skeptical about investing in technology. For decades, he avoided Silicon Valley entirely, claiming that it was too unpredictable and fast-changing to fit his long-term value philosophy. But over time, he realized that some tech companies aren't just innovators, they're utilities of the modern age. His investment in Apple was a turning point. Buffett didn't buy it as a speculative play. He saw it as a consumer brand with loyal customers and a recurring revenue model. Apple's services, products, and ecosystem created a moat that few competitors could cross. As we approach 2026, the next generation of hidden gems in technology will likely share similar characteristics: tangible value, recurring income, and indispensability. Here, where smart money may look. 1. AI infrastructure companies. The backbone of artificial intelligence isn't just software, it's the infrastructure that powers it. Data storage, chips, and networking firms that enable AI adoption are becoming the picks and shovels of the digital gold rush. Buffett loves investing in foundational industries that support innovation, not speculation. 2. Cybersecurity firms. In an era of increasing digital threats, cybersecurity has become as essential as insurance. Companies that provide critical data protection and enterprise solutions may be undervalued despite massive long-term demand. 3. Payment processors and fintech infrastructure. While speculative cryptocurrencies come and go, the real winners are the companies providing secure, scalable payment systems. Firms that simplify global transactions and provide compliance and safety align perfectly with Buffett's preference for steady, essential businesses. 4. Cloud and data storage providers. As the world moves toward digital-first operations, cloud services are the new backbone of the global economy. Businesses that offer consistent subscriptions, predictable revenue, and mission-critical services could easily attract Buffett-style attention. Buffett's modern approach isn't about resisting innovation. It's about identifying where technology becomes a long-term necessity rather than a short-term trend. In 2026, the hidden gems will be those tech companies that quietly power the world's most important systems while maintaining financial discipline and sustainable growth. Lessons from Buffett's past hidden gems. To understand where Buffett might go next, we must look at where he succeeded before. His past investments reveal consistent patterns that can help investors recognize 2026's hidden gems. Apple: the power of brand and loyalty. When Buffett first invested in Apple, critics were puzzled, but his reasoning was simple. Apple wasn't a tech gamble. It was a consumer brand with a fanatically loyal base, recurring revenue through services, and strong cash flow. This investment became one of Berkshire Hathaway's most profitable holdings in history. Coca-Cola: the essence of consistency. Buffett's long-term stake in Coca-Cola demonstrates the power of investing in timeless products and global reach. Despite market volatility, Coca-Cola has remained stable and profitable, because its products are embedded in global culture. American Express, trust and longevity. Buffett's investment in American Express wasn't about chasing returns. It was about trust, reliability, and a brand with deep consumer relationships. In financial services, reputation is currency, and Buffett understood that early. Burlington Northern Santa Fe, BNSF, infrastructure that never goes out of style. Buffett's purchase of BNSF Railway in 2010 was a bet on America's economic backbone. It wasn't flashy, but it generated consistent revenue. Buffett loves companies that the world simply cannot operate without, and infrastructure is one of them. Lessons for 2026. Across these examples, a pattern emerges. Buffett's hidden gems are essential. They provide something society depends on. Predictable. Their earnings are stable and repeatable. Defensible. They have competitive advantages that others can't easily replicate. Reasonably priced. He buys when the market undervalues them. For investors in 2026, the same principles apply. The hidden gems are already out there, often in plain sight, but overlooked because they aren't exciting enough for mainstream media. How to find and invest in Buffett-style hidden gems. You don't need billions to invest like Buffett. You need discipline, perspective, and patience. Here, how you can apply his method to identify and benefit from 2026's hidden gems. 1. Focus on business quality, not stock price. Don't chase momentum. Instead, study how the business operates. What problem does it solve? How predictable are its earnings? If the company disappeared tomorrow, would people notice? That's the Buffett test. 2. Understand the moat. Every company faces competition. The key question, what protects it? Buffett's hidden gems always have a moat, a unique advantage that shields them from rivals. It could be brand loyalty, regulation, technology, or sheer scale. 3. Evaluate management integrity. Buffett invests in leaders he trusts. Management transparency and long-term vision matter more than quarterly performance. Study how executives speak about the future. Are they focused on stability and stewardship, or hype and short-term growth? 4. Look for consistent cash flow and dividends. Cash flow is the lifeblood of every Buffett-style company. Businesses that generate reliable cash and reward shareholders with dividends indicate financial health and maturity. 5. Buy during uncertainty, hold through prosperity. Buffett's wealth wasn't built by buying at the top. It was built by investing during fear. When others panic, he looks for bargains. The best opportunities often appear when markets are uncertain and fear dominates headlines. 6. Think decades, not days. Buffett often says his favorite holding period is forever. While no one can hold every stock indefinitely, adopting a long-term perspective allows compounding to do the heavy lifting. In essence, Buffett's approach transforms investing from speculation into strategy. Hidden gems aren't about luck. They're about logic, patience, and principle. The Buffett mindset for 2026, thinking like smart money. The most powerful part of Buffett's strategy isn't his stock selection, it's his mindset. He's calm when others are fearful, patient when others are impatient, and optimistic when others are doubtful. In 2026, markets may face uncertainty from inflation, elections, or technological disruption. Yet Buffett's principles remain timeless. Smart money doesn't chase headlines. It looks for value in the noise. The key lessons for 2026 investors. Avoid the herd. The crowd is emotional. Buffett is strategic. Trust the numbers. Ignore hype and study fundamentals. Let time work for you. Compounding is the true engine of wealth. Stay liquid. Always keep cash ready for opportunities. Buffett calls it his option to act. Invest with conviction. When you find a true gem, commit for the long haul. Remember Buffett's wisdom. The stock market is designed to transfer money from the active to the patient. Your advantage isn't speed, it's clarity and consistency. By following Buffett's principles, 2026 could be your year to identify companies the world hasn't noticed yet, the true hidden gems that build lasting wealth. So as you move forward, remember, wealth doesn't come from following noise, it comes from following wisdom. Study businesses, think long-term, ignore trends, and invest with purpose. Buffett's potential 2026 hidden gems won't just be companies with flashy headlines. They'll be businesses that quietly power our world. Whether in energy, finance, technology, or consumer goods, the pattern is the same: value, resilience, and patience. The real secret: you don't need to predict the future, you just need to understand it. Watch where the fundamentals lead, and follow the principles that have built Buffett's fortune for decades. If you found this video helpful, comment below what sectors you believe Buffett will target in 2026. Share this video with other investors who want to think smarter. And don't forget to subscribe for more in-depth insights on wealth, investing, and financial wisdom. This video is for educational purposes only and does not constitute financial advice. Always consult with a licensed financial advisor before making any investment decisions. Investing involves risks, and past performance does not guarantee future results.